Hello everyone. So this is update number 2, day 2 for Tesla. And I think last week I produced a video talking about the Tesla share price crash or bottom. And you can just check out the YouTube channel. But today I'm going to talk about what's next. So since the video that I produced last week, I think, let me just check here. Yeah, obviously Tesla has been in this downtrend, and it's trending, right? It's not really picking up enough momentum. Once it gets above the 6-day moving average, it stalls, and then it gets right back underneath the green dot, which is the 6-day moving average. That's currently at 152.22 right there. So what's next? Well, technically, if we look at the MACD and the slow stochastic, we can see that the MACD, the fast and the slow, the orange being the slow and the blue being the fast, they're widening, right? So that's introduces a scenario where there's mean reversion, such that the fast goes back and retests, tries to attempt to cross over from under and above that slow moving average. Okay, and it kind of coincides with the red histogram plot. So that red histogram plot and the blue line, they're pretty much identical. The only difference is that the Squeeze Pro generates these red dots indicating contraction in the Bollinger Bands within the Keltner channel, and that's what the criteria is in order for these dots to appear. On the slow stochastic, which is the normalized version, which is normalized data, a data set that's normalized between 0 and 100, it's definitely hit rock bottom, and it can stay here for a while. Okay, so just because it's oversold doesn't mean it's a buying opportunity. The dynamics and the news involved in Tesla should also change, and there's definitely a lot of news that is purportedly pushing the price of Tesla shares lower. So, but I don't know if that's really the case. Okay, and then finally we have this cumulative delta, which is basically taking the volume from each trading day and plotting it with respect to a Bollinger Band. So it gives us a better like a reference, and it's pretty much identical to the chart, but you have to keep in mind that that chart represents the candlestick's price action, but not really model the volume that well. So here in the cumulative delta, it does a better job in that. So it's obviously showing that the volume is in an extreme position outside that Bollinger Band. Keep in mind, when data is inside the Bollinger Band, that's meaning that the data set is contained within those upper and lower regions, okay, those bands, meaning that's how often we expect that data to be trading within those bands. But in this case, it's trading outside, so we're in an extreme case at the moment. If you look at the previous video, I showed the Wolf Wave monthly chart here, and it was picking off a pretty severe sell signal, or a bearish setup back here in November. And last year, when I even identified this last year, and I thought it was a joke, because you can see that the price projection target is actually $10. Okay, and I was like, no, that's not possible. But I did know that, I did acknowledge that there was this bearish setup, and I was actually looking for a breakout to reach at least a double top, but that failed, and obviously we get this pullback. So we can rerun that, do a replay, and see how that developed with respect to time, and you can see that it actually was. So here in this case, you can see that it did the short squeeze on that bearish setup, and then as it was squeezing higher, it did it again, and then again. Okay, so this is really interesting to watch progress, and then it formed this rounding bottom, and then this is, I was looking for that same rounding bottom in the subsequent attempt, but then it actually failed. Okay. So that's pretty cool that TradingView allows you to watch learn and kind of get a feel for how these Wofles work. And yeah, you know, those are the setups that happen quite often. Like you're gonna get these setups where it's showing a bearish wolf wave, and you're going to be in a position to try to figure out, you know, which way is this going to go. Is it going to be a short squeeze to the upside? And you're going to have to use these. You can see the cumulative delta as we move back and see how they develop. Like here, it is an extreme. Let's just play this again. So here you can watch the volume pull back, and then at this one point where it pulled back to the Bollinger mid-range, it actually started to hold that monthly 6-month moving average and stay above it, and then form a rounding bottom and short squeeze. So you can see squeeze within a squeeze within a squeeze, and you can kind of like, these patterns repeat over and over again. You can see it pulls back, it retests, and then pushes higher. 1, 2, 3, 4, 5, pulls back 1, 2, where it's pretty much you have this bullish engulfing, and then it pushes higher, and then this time you can see it's not the, you know, the way that the you can see that the way that the volume plots with respect to the Bollinger Band, they're much different than the ones that were modeled prior to. Okay, so you can see when you get expansion and you're getting exponential moves, the price up here and then also the volume, it usually hugs right up against the Bollinger Band in an uptrend or a downtrend. But then when the volume starts to exhaust, you can see that it's not hugging it anymore, and then proceeds to move lower. And then in this case, you'll notice that the volume is actually hugging the lower band. Okay, so as the Bollinger Bands start to expand, the volume is also expanding outside that range, and not only on the monthly, but it's also happening on the daily. Okay, but this, in this case, it's quite extreme, and we should make note of that. Okay, so then, like, what's next? So in terms of how to determine whether to get into this and how low is this going to go, one of the worst things about these, you know, being short is that you have to deal with these short squeezes. Okay, and this candle, this is a 1-month candle, they generate huge amount of profits when you catch that direction. Okay, so it usually happens when you get these prices extended away from that 6-day moving average, because a trend, if it's a nice friendly trend, it's usually kind of pulls back and you get those bull flags, right? And that's what can happen here. Like here you can see it forms a pull, and then 2 months later it pulls to retest the 6-month moving average and then takes off. So in this case, it's really extended, forming the bearish pull. It can form a it can bounce right back to a 6-month moving average and then proceed to move lower to the next moving average, which would be the 100-month moving average, I believe, at 87.52. And then the wolf wave projection target is actually showing a price of $6.78. Now, considering how many times this thing split, that would still be worth, my guess would be probably worth the actual value of $678. Okay, that's after, I don't know how many splits that would be. That's my best guess. But the pattern is legit, and it is going to move lower. And until you're going to get definitely some short squeeze attempts where it rallies, and then the one time where I will start to reject the idea that this is going to go further lower is if we get a candle that would be, this is December's monthly candle. January's monthly candle would have to be equal to and greater than the December candle. If that happens, then most likely that's a legit reversal, because if you actually add the 2 months together, it actually forms a doji, and that would be the bottom, and we would start to reverse out of this downtrend. But if that doesn't happen and we get these types of candles moving higher into the 6-month moving average, then that would probably form a bear flag, unless it takes out the previous December open at 197. So the path of least resistance is obviously lower. The wolf wave target is $7, and when that will happen, that I do not know. Nobody knows until it actually happens. But there are some guesses that it would be on earnings. But if there was earnings, that's something that you'd have to be willing to risk the entire position in order to see if that's going to be working with your idea. If it doesn't work, then be prepared for a substantial loss. Okay, so I'm going to produce another update every once a week on the Tesla monthly chart to give everybody an idea, a heads up on when this thing is going to reverse. Because there are several types of short-term trades that I am looking forward to trading. There is this mean reversion here. Like I think if it opens inside day, then Thursday we get a push right to the 157 to 170, and then roll over down back to 120 to 100. All right, thank you very much and have a great day.